Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The May corn contract has been moving up to sideways after hitting our cycle low around March 4th. You can see the upward movement here, but then over the past 2 weeks or so, it's been moving sideways. And we're looking at overhead resistance ahead of the USDA quarterly reports due tomorrow. So as we look at the markets here, we do believe that overhead resistance will probably play a key role in keeping the market or keeping corn under wraps for now. But as you can notice in today's price action, the last 3 days we had a bit of up movement, but today the market's giving some of that back, which continues to be inside of that sideways range that we've seen for the last 2 weeks. You'll also notice here that we've had very good support up against this natural geometric trend line. Upon breaking this trend line, we believe the market will probably have a nice move down, and we have overhead resistance that is consistent with what we saw with volatility-based resistance in the previous chart. So the way in which the market moves from here is going to be key, as well as the information that we'll be able to draw from the USDA report tomorrow. December corn is much of the same. You'll notice that we had key support come in about 373.5. The market then advanced and has been moving sideways up against our 90-degree angle here. You'll notice that the 90-degree angle has in essence been operating as a node, with the market reaching above and below it about the same distance on either side. Once we're able to break away cleanly from this node, we'll perhaps find that we'll have resistance up against the 45-degree area, which is near 397. As well, if the market is able to pop up into this area at the report, this resistance should hold, at which point we think the market could very well roll down, where we'll find potential support initially about the 135-degree mark, which is situated about 375 to 378. Here on our natural geometric progression, you'll notice the natural trend line has been holding very well. We're situated here at a spot where we're looking at a potential lower double top coming into this market here. So if we see the price action come in to touch around 392, 393, that is not much higher than the point of control, which is at 391. This lower double top could very well be a very nice demarcation where the market may make a nice run down. Now on the flip side, if we're able to break above this point of control, we could very well see a market then that makes a move up to challenge the next area up, which is about 400 or so, which would bring us up to our next natural trend line here. But in all likelihood, given the narrative of the supply-demand scenario, unless something drastically different really occurs, we do think that the market is predisposed to making its move down into the summer months. A view of the May contract for soybean now puts us in a position where the market has been able to get above resistance, and this resistance point will now serve as potential support. We have a couple levels that we want to mark off here. We got support and resistance 1, 2, 3, 4 here in terms of these individual levels. Now that the market has actually been able to break out of this neutral zone or this area, what we're essentially looking at then is the market coming up above and finding new resistance at the new set of levels. So if the market is in fact able to break back down, we should see a nice move back down to test support down around 850 or so. If it's able to hold above this zone or this region, which is the 360-degree demarcation, we could very well see a mark or run up to about 940 or so with regards to potential strength. So tomorrow's USDA report is going to be very key for us with regards to how this price action looks to play out. Now, historical norms continue to lead us to believe that the market is still predisposed to wanting to make a run down, and we're seeing a bit of resistance in today's price action. And so as we look at the market here, our bias still continues to be to the downside. but we will simply want to do what the market tells us with regard to the price action as opposed to inferring our predisposed ideas. Here we can see that natural resistance on our geometric level came in very nicely, and the market continues to trace up above what was its natural angle and has now hopped above the next angle here. And so the slope or the trajectory here that we're noticing is showing us that we have one of two things happening. Either this resistance level will hold and the market will move down, or this creeping or kind of choppy movement can actually be viewed as a consolidation, at which point we're looking at a move that the market made here will be mirrored on the other side. If that were to occur, we're looking at prices now that are currently at about 913. That means we could see a move up to about 940 or so with regards to a mirror move on the other side of what could very well be a continuation pattern that is setting up here. We have previous resistance very close to where we are right now. And so again, we're looking at tomorrow's quarterly report to really give us a clear vision as to what may happen over the next couple months. November beans is moving very much in a similar fashion. You'll notice here that the market initially went overbought, but that overbought signal continued to permeate with regards to the market. So now that this price action has permeated in this regard, what you'll notice then is this becomes an uptrend. So the market came in, had a very nice low up against volatility-based support as well as our 360-degree mark, made a nice rally where it channeled, broke through that previous resistance, and is giving us a nice consolidation pattern here. The question again is whether or not this consolidation pattern is a continuation move or the market's going to roll back down. As we sit and as we look at this 180-degree mark of 923 and a quarter, that's going to be very important for us as the market has made its advance here. Additionally, you'll see with regards to the natural geometric progression, we have very nice resistance coming in just above. And so how the market responds at this key threshold is going to be very important to us. Current price action is at about 926.5, and that's well above one standard deviation above the point of control, but just shy of that 940 mark. So that 940 mark is going to be very important to us to see if the market makes a flash move up to that price threshold and perhaps rolls over from there. The price action that we're seeing here in wheat is actually quite interesting. The market made a very nice high coming in after being overbought, made a decline, hit our 270-degree demarcation level, which happened to coincide very closely with the 62% retracement Fibonacci level. After the market hit this spot, it made an advance and looked like it might head higher, but our volatility-based resistance held, which coincided with our 180-degree mark. You'll notice over the last 3 days that the market was very flat across these 3 days. That tells us that there is perhaps a seller here that has come in and pushed the market back down. This level also happens to coincide with what we'll notice here is our point of control. So that point of control level is telling us that we have some good sellers coming in, and this is going to be a very important threshold for the market to be able to break through if it is to move higher. The reality is that we've had quite a bit of news telling us that we've had freezing in some of the key growing regions for the winter wheat crop. And so because of that, we've seen the volatility where the market would spike up and then spike back down and spike back up again. What we're noticing here is that the bad weather perhaps may not be coming through as previously forecasted, and thereby the supply and demand narrative is coming back into the fold, and perhaps wheat is going to be heading back down again. So for now, it's going to be very important to watch our key support and resistance levels. Point of control in particular sitting at about 484 is going to be very important. As the market moved up into this area, it sold off very hard today. And again, as we look at the USDA report, we'll be able to get a better idea as to what we're looking at and what we're dealing with. In closing, we'll have a look here at the crude oil contract. It's been fairly volatile over the past couple days. We had our initial mark coming in at the March 11 high, where the market did drop down. He came in and actually found support inside of our support resistance band here. The market then advanced and has since declined again, retesting right back at our support resistance band. Because of the nature of today's move, we're now predisposed to thinking that the market could very well advance up into our April 8th timeline, perhaps touching our 43.95 price target, or maybe even coming shy, maybe closer to maybe 43. If it comes into this area around this price threshold, and then we're looking at a potential move back down for resistance, and just in terms of just natural corrections here. Also, what we've done is we've actually taken a bit of Elliott wave analysis here to look at this initial impulse move. And what you'll find is if you multiply the range of this impulse by 1.618, that gives us that 43 mark that we're looking at right here. And so it's not uncommon to see this rhythm happen in the markets where we're now looking at a possible wave 4 consolidation to come in before our next leg up inside of this move. And so the way in which we respond to this April 8th timeline will be potentially key. The following week, we do have an OPEC meeting scheduled with potential freezes on production levels. And so we'll continue to monitor the crude oil contract in that regard and the news that will come from those events. Thank you once again for joining us for our weekly market update, and look forward to being able to touch base with you again next week.